Hi, welcome back to Joe Blogs. In today's episode, I want to provide you with an update as to what's happening in the Russian economy because cracks are now starting to appear in the economy itself. If you've been following the channel, you'll know that I recently posted a video talking about the fact that President Putin recently announced that Russia is now intending to cut back on its defense spending for the next 3 years. And that's really counterintuitive given the fact that Russia is still in an active war situation in Ukraine. And in 2024, Russia invested $150 billion into defense spending. And NATO, which are basically the enemy of Russia, that's one of the reasons why the war in Ukraine was reported to have started, because President Putin was becoming agitated by the fact that Ukraine was talking to NATO and thinking about joining. He didn't want the NATO forces on Russia's border. NATO recently announced that it's committed to increasing its defense spending to as much as 5% of GDP. So we've got a general increase across the world at the moment in defense spending because political and geopolitical risk is rising. There's certainly more warfare and risk of warfare than there was 10 years ago. However, Russia is now cutting back on its defense spending, and that really tells us that there are serious problems going on in Russia right now because Russia wouldn't be taking that action unless it had problems with regards to being able to fund all of the things it needs to provide capital for. And what we've seen now from the June data is that the Purchasing Managers Index, which we'll go into some details about in a moment, has fallen to its lowest level since the start of 2022. And this tells us that the economy is really slowing down and problems are starting to manifest themselves in all of the companies in Russia. So in terms of the Purchasing Managers Index, what is it? What does it measure? What does it even mean, Purchasing Managers Index? Well, the purchasing managers are people in key companies, in all companies around the world, who purchase in goods and raw materials that that company needs. So if you're a manufacturing business, you might need to purchase raw materials and lots of different things for your manufacturing process. So these purchasing managers have really good visibility as to what's happening in their companies because they're having to buy things in advance of the company using those materials in their process. So when the purchasing managers are buying more, then that tells us that companies are growing. When purchasing managers are buying less, it tells us that the companies are slowing down and in decline. And in terms of what is the Purchasing Managers Index, well, this is a survey that's taken from all of the big companies in your economy. They'll be contacted on a monthly basis and they have to answer a variety of questions. And based on the answers that they're given, an index is put together and it tells us whether or not companies are expanding or contracting. So if we look at how the PMI index is put together, it's split out into 5 different categories. So these are the questions that the purchasing managers at all of the companies are asked. And they're based on things like the new orders. So what new orders have you been placing for all of the materials and everything that your company needs? What's going on with production? So the actual output of your business, is it producing more or less than it was last month? What's happening with employment? Are you expanding? Are you taking on more staff, which obviously indicates that your company is growing, or are you cutting back on staff? What's happening with supplier delivery times? So are you receiving everything that you want to on time? Is everything going to plan, or is it a nightmare, such as back in the COVID-19 pandemic period when everything stopped and you couldn't get anything in terms of supplies? And what's happening with your inventory level, your stock? Are you selling everything that you're making, or are you just building up more and more stock? Because that tells us that you're not selling it and therefore your company is in trouble. So these are the questions that the purchasing managers are asked in every country, including Russia. And then once all of those questions are answered, the PMI itself, so the index, is calculated taking those survey questions. So it looks at each variable and answers whether or not the conditions have improved. So are things getting better for the company? Have they stayed the same? Is it the same as it was last month? Or are they deteriorating? And then once you've got that data, that's then put into a formula. So the index is calculated using a percentage of the improvement, so whether it's gone up or whether it's gone down, and then adding 50% of the percentage of no change. So I'm not a mathematician. Maybe you can work out how that actually works, but that's what the formula is. I thought it was worth putting in just to show you if you're interested. But the key issue here is that an index goes from 0 to 100, with 50 obviously being the midpoint. So when you get a response, when the PMI index is above 50, then that indicates expansion. That tells us that the companies are on average growing. So things are going in the right direction. When it's at 50, then there's no change. So that's basically status quo as it was last month. And if it's below 50, then that tells us that things are worse and that the companies are contracting. And in terms of the breakdown of how the PMI is put together, broadly speaking, it's based 30% on new orders, so around about a third on whether the purchasing manager is buying more raw materials. 25% on output, is the company actually producing more things than it was? 20% on employment, 15% on supply deliveries, and 10% on stock, on inventory. So once you put all of that into the equation, you get your PMI. So let's have a look at what's going on with Russia's PMI. So this shows the movement in the Purchasing Managers Index over the last 12 months. And the scale on the right-hand side here is an index, and it goes from 46 at the bottom to 56 at the top. And as we've just discussed, 50 is the status quo midpoint that tells us neither expansion nor contraction. So what you can see here, if we look at the overall picture and we look at that 50% line, you can see that over the last 12 months, the vast majority of months have been reported above 50. So they're above 50. That tells us that officially the Russian economy was growing. But when you look at the general trend here, if you take a step back and have a look at broadly where it's going, back in June of 24, the index was sitting at just below 55. So that indicates quite significant growth. When we're talking about the PMI index, it generally moves somewhere between 55 and maybe 45. It doesn't go to 90 to 10%. That would be too extreme, because this is looking at what's happening month by month. So you're looking at the previous comparing to what's happening last month. So 55 represents significantly strong growth. But over the last 12 months, we've seen that coming down significantly. And in June, the official figure is 47.5. So that represents almost a fall of 10 points compared to June of 2024. And we can see that this trend over the last 12 months has been moving in this direction. And when you look at 47.5, that's actually the worst performance out of any of these 12 months. So this tells us that not only are things now contracting in Russia, but they're actually contracting at a very rapid rate. This is the worst that Russia has seen at any point in the last 12 months. And if we expand the scale of this chart to show the last 3 years, you can see that 47.5 is actually the worst recorded figure for Russia at any time in the past 3 years. And in fact, this is the worst since March 22, which was just after the war in Ukraine started. It kicked off in February 22. So what this tells us is that things are not going well in Russia. And when you look at the trend since the beginning of 2024, there is a significant downward momentum here. So things are going really south quite quickly from Russia's point of view. And if we have a look at the details as to what's happened in June 25, why the index is now down to 47.5, in terms of new orders, they have fallen sharply. And those falling orders includes a drop in export orders, reflecting reduced foreign demand for Russian goods. So that's obviously bad news from Russia's point of view, because the markets that it was still able to sell into, avoiding the sanctions, are now starting to buy less than they were historically. In terms of employment, firms in Russia have cut back on jobs in June, and they've cited lower production needs and cost control. Now, this is a really interesting development, because if you've been following the channel, you'll know that Russia has switched to this wartime economy. Lots of companies are now sponsored directly by the Kremlin to produce things for the war effort in Ukraine. And the rest of the companies in Russia have had to deal with rising wages, because basically the Kremlin sponsoring all of those companies has pushed up demand in those companies. They've been trying to hire in as many people as possible. That's pushed up wages across the board, increased prices for other Russian companies, and is causing problems. But what we're seeing now is that those firms, so the ones not being sponsored by the Kremlin, are now cutting back on the number of people that they're employing. And that tells us that the real economy in Russia is starting to suffer, because the ones that are being sponsored to help the war effort are slightly protected because they're not really having to sell anything into the real world. They don't really care what's happening globally or in terms of demand for Russian products, because they're getting money probably from the National Wealth Fund. But real Russian companies are having to cut back on the number of people they're employing. And that tells us that there's a fundamental problem. Now, in terms of input costs, they've continued to rise due to import substitution sanctions and supply disruptions. So basically, what that tells us is that Russian businesses are still suffering as a result of the sanctions and trying to find appropriate things that they can use in their manufacturing and other processes. And they're increasing in price. So that's pushing up their costs, which is one of the factors that's driving up inflation at the moment in Russia. It's currently sitting at close to 10%, which is 2.5 times the target rate of 4%. So we've got a combination here of new orders falling, employment falling, but costs rising. And that's a problem for Russian companies. In terms of supply and delivery times, they've also worsened due to logistical bottlenecks and geopolitical restrictions relating to the sanctions. So, Russian companies are still struggling to be able to get the materials and goods that they want on time. And in terms of business confidence, it's dropped to its lowest level since October 22, largely due to the sanctions, capital controls, and uncertainty around the military spending cuts. So, what we discussed earlier, whereby Russia is going to pull back on its defense spending, is very likely to have a direct impact onto those companies that are being sponsored by the Kremlin. Because if Russia decides that it doesn't need as many new uniforms or whatever it might be that they're paying those companies to produce, then obviously they'll reduce the level of orders and those companies won't get paid as much either. So this is going to be a major problem for most companies in Russia. And what we are seeing here is that the reality of the situation, the 3 years that this war has been going on for, it's more than 3 years, has really drained the National Wealth Fund. And Russia is now starting to suffer in terms of it's going to pull back on its defense spending. That's going to reduce the amount of guaranteed revenue for those state-sponsored companies. And the other businesses in Russia are also suffering. So we've got a real double whammy impact here. So what's the summary and conclusion today? Well, I wanted to post this video because we've been talking about what's been happening in Russia for the past 3 years or more since the war in Ukraine started. And what we've seen in today's video is the reality of what's happening starting to feed through into the economic data. So we're seeing the Purchasing Managers Index, which basically gives us the heads up as to what's likely to happen over the course of the next 3 to 6 months, because these purchasing managers are looking forward. They're ordering in raw materials and goods for their processes. They have to calculate how much their company is going to need over the next few months. And then the company will use all of that in their production process. They'll produce their goods and services, whatever they're doing. And then consumers will buy them at some point over the next 3 to 6 months. So what we've seen in today's video is that the Purchasing Managers Index is at its lowest level for more than 3 years. And we've seen a sharp fall in the PMI over the last 6 months. It's now down below that critical 50 level. That tells us that companies in Russia are currently contracting. They're not growing anymore. They're actually starting to lose staff. They're reducing the new orders going forward, and their input costs are rising. And that's really a nightmare situation for companies, because what it tells us is that they're achieving less sales, and they're going forward, they're going to produce less. So therefore, it's likely that they'll sell less as well as the reduced demand. So we've got falling revenue over the next 3 to 6 months at the same time as employment is being cut. And when you cut staff, it makes it very difficult to ramp back up again. That tells us that companies believe that this is a medium to long-term situation. You don't release staff because you have a bad week's trade. You just trade through it. But if you're starting to cut back on your staff numbers, then that really means that you've got fundamental problems. And at the same time as that's happening, input prices are going up. So the costs are rising while sales are falling and employment is falling. So that's going to reduce the profitability of those Russian companies. And what we could see is a whole raft of these businesses either making reduced profits or even losses. And this could really be the start of a recession forming in Russia. And it will be interesting to see what happens over the next 3 to 6 months. If we continue to see the PMI index falling below 50, that tells us that the contraction has gone on for a longer period of time. And all of this indicates that Russia is looking at a very bleak second half to 2025. And this could be the start of serious problems emerging in Russia. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and thank you so much to everyone that's supported me. If you bought me a coffee or sent me YouTube super thanks, thank you so much, really appreciate that. And if you're a long-term supporter, either through Patreon or YouTube membership or Buy Me a Coffee membership, thank you for that support, really helps keep me motivated. And here's something to put a smile on your face.